The great Peter Lynch, who ran the Fidelity Magellan Fund and returned about 27% for his reign there, uh, he said about corrections that it's a euphemism for losing a lot of money in a short period of time. But he also said that the most vital part of your body is the stomach and not the brain. And I'm going to get to that later on in this video. And that we do have a correction. We are in what I would call a bear market. And it's our third bear market in the last 5 years. And typically we only have one every 4 or 5 years. So this is uh, getting to be a little too common here as we had one, and I don't know if this will go back that far. The COVID crash, this is the COVID crash down here. And then we had the 2021 to 2022 bear market, a nice run. And now, the Nasdaq's 18% off of its high, heading lower. We are in a bear market. I've been saying this for a while that it's acting like a bear market, walks like a duck, talks like a duck, smells like a duck. It's a duck, and it's below the 200, been below the 200 since March. This is April. We're heading into our second month of trading below the 200. I don't know how long it's going to do that for. It did it for 11 months in 2022, but we've had this correction here where it traded sideways for a couple of months. So it trying to, wear you out through time, and now it's correcting through price. I'm going to call this. You could look at this a couple of different ways. I'll go here and just say this is, like the ABC pattern. This is your A pattern, that's your B, and this is your C, and this will be the last leg down according to the ABC pattern. I don't know. I kind of look at things maybe a little differently. You could also say that this is, your first leg down, then your run up. This is your second leg down, run up, and now we're starting our third leg down. But if we look at the weekly, this looks just like a topping pattern. And now we started our first leg down, then we ran up a little bit. Now this is only the second leg down. And we could have a wave down to 15,708 or 15,222. But whatever it is, wherever it stops going down, whenever it returns to glory, or whenever it starts a new uptrend, I should say, there's going to be stocks that are presenting opportunities. I'm going to get to this at the end of the video, though, but I just wanted to just point out that, Nvidia was down to what, $10 on October 13th of 2022. And if you bought it then, it's a 10 bagger. Peter Lynch is also the one who created as far as I know, the 2 bagger, the 5 bagger, the 10 bagger. And he was always one to say, why would I buy a stock here, at 30, and if it goes to 100, yeah, that's, a 3 bagger. But if I buy it at 10 and it goes to 100, that's a 10 bagger. So, you always wait. You can always wait and get a lower price, but we should embrace lower prices on quality stocks. And I'm not talking about Nvidia. I don't think this is one that was coming back. I talked about I'm getting off track here a little bit, but I talked about this January 27th as a shot across the bow for the AI stocks, and it's proven to be true. I don't want to pick on Nvidia here. I can pick on Vertiv. This was down 30% in a day, maybe 29. Yeah, 30% on January 27th, totally abnormal. But it was still at that time, it was trading, the last was 102, and now it's at 67. VST, Vistra had this massive run, shot across the bow on the 27th, down 28%, but still it was at 137. Now it's at 108. So when the stock acts abnormally, you have to take notice. And that's just, I don't know. I just wanted to start with that. I don't know why. I'm going to go back to the index. The shot across the bow. The reason why I started, because I did watch some financial TV when I got home today, and people are saying buy the dips. You can't buy the dips in the bear market because it's just going to go lower. It's going to keep dipping and they keep losing money. It's going to be very frustrating for you. I know a lot of people who subscribe are in cash, and that's fine being in cash or just having, small positions where you don't get hurt. But there's no edge here. I would say, your only edge would be on the short side with the SQQQ. This one's acting like, it's in a bull market here, just coming off the lows, ran up 26 to 40, pulled back to a moving average, which you want to see, right? This is, if you're a long on a stock, this is what you want to see. this pullback, the 26 to 40. Then this pullback came with lighter volume, the lowest volume day. Then it started popping up. Now today it was up 16%. Do I own SQQ as a hedge? No, I don't. But it's not a bad idea, I got to admit, because gosh, I don't want to get political here. I just want to make money in stock. So it just seems that the administration's okay with the stock market going down, and they want lower rates. They said over and over and over again they want lower rates. So they're going to get their lower rates one way or another. So just they know that. Okay. All right. I'm going to go back to the Nasdaq because it's 18% off its high. Peak to trough, 20,204. December 16th was the high. It was never able to make another high. Made a couple runs at it, but this peak to trough is 18%. And you say, well, 20% is a bear market. That's what the financial pundits will tell you. It's not a bear market yet. Well, BS. When you have leading stocks like Tesla, 50% off of their highs, it's 45 now, but it was over 50. And you got stocks like AppLovin, these former leaders, 50% off of their high, and MicroStrategy, 48% off their highs, and like Elf, 75% off their high. And this goes to the rule of former leaders, 50% will go down 80%, and 80% will go down 50%. So Elf is one of those 50% going down 80%. And the former leaders are just getting hammered. Here's Abercrombie and Fitch down 64% off its high. Celsius, former leader, 63%. And it just goes on and on and on. TMDX is a former leader that's just only 60% off its high now. But you get the point. The former leaders, when they're down this far, this is a bear market, folks. Yeah, when the Nasdaq's down 20%, these are down 60%. And that's what happens with growth stocks. That's why you can't hold on to them. They'll just absolutely crush your portfolio. But I will say, when the market turns around, and I will go back to the Nasdaq because it will turn around. When, I don't know. But I think, this next leg has got more room to go further down. I would say 15,007 is, definitely an area of interest here. The next, level of interest. I should give you the low today. And also 15,222 would be an area of interest as well that I'd be watching. But for right now, today the low was 16,533. It closed at 16,550. So very near the low of the daily range. 23% above average daily volume, down 1,050 points or 6%, in close at 16,550. To me, this got momentum. This looks like an island reversal, right? Here's your little island, right? You got this little cluster, little island, and then it reverses lower. Or if you were a Darvish type person, you'd say that's a Darvish breakout to the downside. So if you're short, you're licking your chops. This looks like it's got more room to go to the downside. Anyway, just pointing that stuff out because just trying to be real here and not trying to sugarcoat and tell people to buy the dips. That's absolutely insane. If you want to lose money, buy the dips by all means. But if you want to preserve your hard-earned cash like I do, then either go to the sidelines or trade small. And I'm going to give you some stocks that I think are going to perform okay in this market. At least, if you want to be invested, they're not going to kill you. I don't think. Anyway, you never know in a market like this. I got to go to some of these other names. I think Apple below 200 is a real problem here. Here's your bear wedge, right? Because this thing just traded down. This is looking like this three-wave down as well, right? Here's your first wave. Then here's your second wave. Then it's got this little wedge pattern as it tries to trade up. Look at how fast it goes down, how long it takes to go up. And then all of a sudden, boom, you get the trapdoor move to the downside with massive volume. So that's just what happens in bear markets. And I'm calling this a bear market. You can call it a downtrend. You can call it whatever you want because the stocks are going lower. But yeah, I mean, this is every bit. It's got all the characteristics of a bear market. This is Microsoft. This has been in its own bear market. This thing's ridiculous. Google. Now the Mag 7 was hit pretty hard today with these with the news, of the global. It was a global sell-off. It wasn't just the U.S. markets. It was, the the rest of the world markets as well, the European markets and Asia and all that. So Google was down 4%, which when the Nasdaq was down, what did I say? 5%? Or did I say 6%? What did I say? Let me go back here. 6%. You know, Google only being down 4%, that's pretty good, right? But it's already been in a hell of a downtrend, and you got to expect some short covering there when shorts have made so much money to the downside here. This is Meta Platforms down 9%. And yeah, these are all just getting hammered. What can I say? Amazon, the Mag 7 are just getting absolutely crushed, which reminds me I should go to the RSP and the SPY. I'm all out of sorts today. I went golfing. Wasn't really watching the markets that close. I knew it was a sell-off. I was just watching the last half hour to see if there'd be some buyers, but there wasn't. So that tells me there's probably going to be more selling tomorrow. We have the non-farm payrolls number tomorrow. This is the RSP. This is the SPY without, equal weighted, without the heavy weights. The Mag 7 being weighted is same as the other 493. This was down 4.76% with volume, heavy volume. This is the SPY 4.93%. So the Mag 7 is dragging, a big drag on the SPY. Man, look at this volume here, 117% above average. So people are just saying they want out. They're coming out of the U.S. market. We know, we've known, I've talked about that for a while, that a lot of the foreign markets are doing better than U.S. market. They're pulling the money out of the U.S. market and buying foreign assets. So anyway, we've known that for a while. I'm not going to go into that at this point. I will go to some leading stocks because it's all about the leading stocks, right? And what we want is leading growth stocks, not just, defensive names like, McDonald's and Coca-Cola, which had good days today. And I should get there in a minute. But since, I'm talking about these are defensive names, Warren Buffett stocks that, they pay a dividend. People are going to drink Coke regardless. They're going to go to McDonald's. And so, some of the food names as well, people are going to eat. This is Kroger's. So those stocks did well today. And same, kind of defensive O'Reilly because people aren't going to buy cars. They're going to fix their cars. That's the thought process there. AutoZone, you go to AutoZone, fix your car instead of buying a new one because the tariffs are going to make, the autos cost more. So anyway, I'm going to go back to what I know is working, and that's the gold stocks. This is Agnico Eagle Mines. You can see it pulled back today sharply to the 21 and then bounced. I kind of like that action. I wish I would have bought this on the pullback this morning. That was a nasty pullback. Now, gold was down, a couple percent today. All the commodities were down. Oil, silver, copper, everything is down due to demand destruction. I don't know how long that will last. I doubt it lasts long. But Agnico Eagle Mines, yeah, it was down to 102 this morning. So, and then rallied back up to 110 and then closed at 108. So nice day for Agnico Eagle Mines. And a lot of these Canadian or just the gold stocks did this today. Pulled back to the 21 and then bounced sharply. So just a little okey doke there to the long side there for these gold stocks. So, if you like gold, I don't. I'll trade anything that's moving higher. This is DRD, made a new high today. It's just flat on this session. This one pulled back to the 10. I believe it had that same type of action. Yeah, just sell off in the morning, came up and was flat for the day. So not bad. Flat on a day like today is fantastic. Heck, if you only lost 1 or 2%, that's fantastic. Most stocks, like the index, were down, 4, 5, 6%. Other, FNV, Franco Nevada. Same thing, pull back in the morning, to the 21 and then bounce. Just peculiar action. I don't know really why it bounced. Excuse me. I don't know why it pulled back, only, because maybe gold was down 2% or they've had a big move recently. But yeah, nice pull back to 156, then ran up right away, $5 to 161, closed at 158. A nice gain on the day of 1%, You can't beat that with a stick. Come on. We'll take any type of gains when the market's selling off like this. Same action here in Royal Gold. Pull back to the 21 and bounced higher. 1.65% move. Take a look at the 5-minute. You got to be quick though. I mean, this is quick. I mean, you're talking from a low of 1:59 and 9:35 a.m. here at 10:35. An hour later, we made one $10 move right there. So you got to be quick. And you got to be watching these things. You got to, they got to be on your radar. You can't just say, "Oh my gosh, this thing's making a new high." Well, then it's too late. You can always, put them on your watch list, all these gold stocks, because they're doing the same thing. They're just making new highs. And if you want to own them, I doubt if they're going to set up in bases like this. They're just going to pull back to the moving averages like, leading stocks do. Anyway, uh, gold is where it's at right now. Same with the insurance companies, same thing, bro. I didn't have this one on my ready list this week. I had it last week, but I do have this one. This is Aflac. Pull back to the 21. I wasn't even watching this one today. Oh, nice close. Yeah, sell off into the close. Still up for the week, nearly 2%, so not bad. And then Allstate, I believe Allstate had a decent day. It's down for the week. Flat on the session. That's good. Like I say, flat's good. KNSL, this is Kinsale Capital. Nice move here today, 1.5%. And then Ryan, kind of kicked myself for not buying this one. It was in this cup with handle, strong group, strong stock, making new highs now. Did I buy it? No. Anyway, Ryan looks good. Anyway, that's gold. Insurance, once again, we've got the defense names, and it stands to reason the defense would do okay. This is ERJ. This one made a big move in the morning, and it did the opposite of what gold did, right? Because I looked at it earlier. Yeah, this one was way up and ramping, closed lower 1.4%. No bueno. This is a Brazilian manufacturer of aircraft. Somebody asked me about the German defense names, and this is Rheinmetall. Rheinmetall, I guess. But you could see the defense aerospace group is high. This one, it's a ADR, trains kind of sporadic, very thin trade, but up 5% today. So you can't beat that German name. And if I just look at the weekly chart, it's made this big move, right? Holding its gains. That thing looks pretty decent. The other one is BAE Systems. This is an aerospace defense name. Once again, Gap Tire holding its gains up 5.5% this week. So there's a couple German names, defense names that I like and are holding up okay. The other defense utility names that are looking good. This is Duke Energy up 4% this week. I think it had a decent day today. Yeah, it's a nice breakout off the moving average. That one looks pretty good. AWK, this is American Water Works. I've got to look at the weekly on this one. This one looks fantastic. Cup with a nice shakeout on the handle, now moving higher, up 4% this week. I think we'll take 4% in this tape, won't we? And then DTE Energy, a utility diversified stock, just making new highs. Surfing the 21 like Kelly Slater. Let's see the weekly up 2% on the week and just grinding higher. These stocks, nobody talks about these stocks. They're boring. I get it. But they're defensive and they're going to do okay in, these three groups, four groups that I just mentioned, I think should do okay, in this current environment with the yeah. All right. Another group that I think could do okay, because regardless of tariffs or whatever, people are going to take their medication, right? People need their medication to function properly and have a higher standard of living and live better. And this is a China-based ZLAB. I was going to put this one on a ready list last week. I didn't. I didn't put it on this week, but I'm ready to. It's got this cup shape pattern. You can see a stage one base just going sideways here. This is an inside week this week. I really like the looks of this one. If the market would just be somewhat decent, not just cratering, uh, I would put more riskier stocks on. This one's got, tremendous growth profile, goes from 39% to 48% to 66% sales growth. That's what you want to see in in a new growth stock. You want to see that sales growth ramping. But the drug stocks to me could be an area because people are going to take their darn drugs, I'm telling you. This is AstraZeneca up 2.3%. Yeah, flat on the week, but flat is good. GlaxoSmithKline, some of these UK, these European drug stocks didn't get hit with tariffs, so they fared a little better today. This one's up nearly 1% on the week. It was up 3.64% today. So some stocks are surviving. AstraZeneca, GlaxoSmithKline, and Novartis, these three from Europe that are holding up okay. Flat on the week. Novartis was up 1.35% today. So not bad. Some other drug stocks, a little more growthier names. This is ADMA. This one looks pretty darn good to me. It's got this cup with handle pattern. Like I said, I would put this stuff on, but it's a risk-off environment, and I don't want people getting crushed because this does have the ability to move fast, and it can move both ways, up and down. Inside day today, this one looks to me like it's just kind of calm in a storm here. Down 4% this week, so maybe a little handle forming. So maybe I'll put it on next week if I feel a little more or less risk averse. We'll see. Gilead, pulled back for the first time since the breakout to its 50, found support at its 50, and now moving higher. Gilead looks pretty darn good. Had a decent week, I believe. Yeah, up 0.5%. Not bad. I mean, all things considered, this has been rough, folks. Other ones is Vertex. This is a larger drug stock, now flat on the day where the rest of the market got creamed. You can see it looks like it's forming a handle here. If I go to the weekly chart, yeah, a nice 3-week pullback to a moving average. That looks pretty good. That could appear on our ready list as well. I kind of like the drug sector right now and the cybersecurity, but I'm not going to go there because they just got wiped today, and I'm not really interested in the carnage. I'm not going to do the triage of the carnage. Molina Healthcare up 7.5% today. Hello. That's definitely standing out like a sore thumb. And the medical software, the medical managed care, the medical product stock they really stuck out today. This is ELV, another medical managed care stock, Elevance Health, up with volume, still below the 200, but stocks that are up with volume in this type of environment, I'm going to pay attention to that. CVS had this on the ready list last week or the week before, and it's just going sideways. This probably has like a 5 weeks type pattern. It looks that way anyway. It was what, 3 weeks, and it's just trading tight, 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 but grinding higher, 0.5% this week. Last week it was probably something similar, right? Yeah, 1.13% and then 2%. So just grinding slowly higher. Slow and steady wins the race in this type of a market, I guess. United Healthcare, this is a Dow Jones Industrial Average stock, $540. So it's a price weighted index. This carries a bunch of weight on the Dow Jones Industrial Average. It made that low of 438. When was that? February 21st. Anyway, it's below the 200, but like I said, 3.3% move when the rest of the market's cratering. That, I pay attention to that. MCK, McKesson, this one, just what can you say? Take a look at this. Up 3.3%. Looks like it's had a hell of a week this week. 7.32%. So a nice move in this medical wholesale supplier stock. So there's money moving into drugs and medical managed care, medical products. This is Edwards Life Sciences. Doesn't really have quite the growth profile, but it's consolidating within a base, trading tight near its moving averages, and it just ticked above the 200 today. There you can see it's all within 0.5% of the 10, the 21, and the 50. So and we'll see what happens with these. I don't know. I just got to give them time. I'm just trying to acknowledge some strength there. This is Quest Diagnostic, another medical services. This is a top 10 group. So just pointing out here some strength here. And this looks like it's flagging after this move higher. It's, showing this little pennant type pattern here, pinching in, popped a little bit today. So not bad for Quest Diagnostics. All right, I'm going to move on to the trash. It's a trash market. So in trash markets, we want to own trash, Republic Services. these things have been grinding higher. I've been pointing them out here for a while now. Yeah, I mean, waste management is the one I like in this group at RSG. Definitely another stock doing well within the group. Waste management, I believe, made a new high today above 240. No, 239. Okay. Yeah, it was upgraded. So yeah, had a nice move with volume today. And the other one I was looking at was Waste Connections. Another one, yeah, making new highs. So you just got to acknowledge, strength in a weak tape. It's likely to carry on. And the market is likely to move to the downside, and these stocks showing strength are likely to continue to show strength as investors kind of hide in these value type plays. All right, that's it for me. Thank you for watching. Except for at mcstockcharts.com, I have one more thing. I mentioned Peter Lynch because he talks about corrections a lot and he embraced corrections. And that's where he made his money within corrections. He was excellent at buying lows and bottoms and then holding. But like I said, one of his fangs is that, that your most critical component of your vital organ is not your brain, it's your stomach. And what can you stomach? Obviously, he was an investor of a fund and had to be invested. So he would buy things, but wait for them to come down. Now, he talks about stocks that, if you buy a stock at 25 and it goes to 100, that's great. That's a four bagger in his terminology. But if you wait and it comes down to 10 and it goes to 100, that's a 10 bagger. So instead of jumping the gun and buying it at 25, why don't you wait till it comes down to 10? And I'm thinking this applies to Dutch Bros because if you follow Dutch Bros or know anything about this company, they're taking market share. Now, I expected this thing to have trouble at 81, the old high. And it certainly did. It traded above it following earnings, went up to 80. What is that, 86? And now it's pulled back. This is a monthly chart. So the last couple of months, it's pulled back significantly. If you look at the weekly chart, you can see this is a nice, pullback, still consolidating within a base. But let's say you're holding Dutch Bros or you want to own Dutch Bros, right? Maybe, just keep an open mind here. Maybe this will be a leader of the next rally higher, which I think it will be. And maybe you can get it at, I don't know, what is it at today? 56 bucks? Yeah, maybe you can get it at 56 bucks. Well, that'd be great. What if you can get it at this old pivot point of 43? Well, that would be great too. Say it's going to go to 200 in the next uptrend. Well, wouldn't you rather get it at 30 bucks when it pulls back here or even 20? So if it's going to go to 200, maybe we can get it at 20 bucks in a real severe bear market when they wash everything out, which would be a price, lower than May of 2024. So I don't know when it last traded at 20 bucks. It was a long time ago. Yeah, 2023. So my point is you got to be patient. You got to know what you're looking for too. That's why I'm saying I'm putting together a video of maybe 10 or 12 stocks that I think could be leaders in the next uptrend. That doesn't mean you go out and buy them tomorrow or next week or next month. You just got to be patient and wait for this market to, finally shake out all the bears and trade like this right here. This three wave down pattern we saw in this bear market, which was 38%. This right here is a 38% drawdown. This right here is already 18% drawdown. Okay, so we're halfway there, as a Bon Jovi would sing, right? So anyway, somebody sent me a video today of Graham Nash singing "Teach Your Children Well." So teach your children well, teach them to be patient, teach them to wait for maybe a 15.22 or maybe a 12. Wouldn't that be great? A 12.54, if it could trade all the way down here, we'd get Dutch Bros at 10 bucks, and when it runs at 200, we'll have a 20 bagger. Anyway, we're in the business of speculating, and so I'm speculating that this index is going to trade lower and all the growth stocks are going to trade lower with it. But at some point, it's going to provide us a buy point. It's going to provide an opportunity of a lifetime to buy those quality stocks that are taking market share, that are delivering quarterly earnings in year after year after year, which I think this is going to do. I go there like 3 times a week just just to get my dog a pup cup and just to see how business is doing. These guys, we have a lot of them around here, and these things are packed. I think they're going to deliver, like Starbucks did for 10 year of outstanding growth, and that's my story, and I'm sticking to it. There's a couple others that I like. I've mentioned TGTX. The people with relapsing multiple sclerosis are going to take this drug. I mean, they don't care about tariffs. They don't care about a downtrend. Heck, they're trying to, live a better life and stay healthy and be able to function properly. And yeah, this thing ran up, then it consolidated, and then it made a new high after their earnings report. It's been what, 1, 2, 3, 4, 5, 6 weeks. Okay, so now it's pulled back the last 2 weeks. So what? If it trades between 36 and 40, so what? We look at it maybe 4, 5, 6 months down the road. I think this is going to be easily a $10 billion market cap. Right now it's at six. So you're looking at a 40% upside move. So do you buy it now? You don't have to. I think you can get it lower, but if you wanted to start nibbling, I don't think now is a bad time. Or if it came down to that 36.84 buy point, I think that would be a good risk reward. Look at how it's holding up in this dreadful market, right? It was an inside day today. We know it's best in show. This week it's down 1%. Big deal, right? 9% off of its highs. Anyway, I have a couple other stocks. I have, like I said, 10 or 12 stocks. I'll get to that sometime soon. I'm compiling a quality list. And like I said, some of the stocks may not even come to market yet. Some of them may have just come to market. You don't know. But when you have triple-digit sales growth, that's a clue that could be a winner down the road. So you want to keep an open mind. I like to speculate. I like to dig into companies and see what's going forward. But for God's sakes, do not listen to people telling you buy the dip on AI stocks. These things are done, over with, Kaputski. I can't say it any more emphatically. Yeah, it might form a base, and they might recover and form a base and make new highs. But if they do, we'll have plenty of time to buy into something like that. But for now, these things are dead on arrival. So yeah, I just heard that as I flipped on the screen today, and it drives me crazy. It makes my blood boil when I hear people saying, "Oh, just buy the dip." Very cavalier, very casual. They're trying to sell you something. I don't know. 57% off the highs. Do not buy this junk. No, I forbid you. Anyway, do what you want. If you want to lose money, go ahead and buy it. But anyway, at mcstocktrust.com, we never give up.